Ladies and gentlemen, welcome back. This is Christopher Aaron. It is September 24th, 2020. This is the iGold Advisor channel, and we are back after a short little break here. I'm glad to be back in the studio. I'm glad to be here with you. I am glad you are here with me. Let us have a proper gold price forecast, shall we? We certainly did not get the short term right. Going back from the video from 2 weeks ago, the short term here has become more murky with this deluge of a selling that we've seen over the last few days alone. However, I do believe that we will be getting the long-term forecast correct, and that is what we want to look at here in this video. Let us go for it. And I just want to remind you to hit the big red subscribe button and the little bell icon so that you will get notified when these videos come out. Let us look at the price of gold over the last 3 days, talking about that bit of a selling spree here coming in starting on Monday. This was the big breakdown here Monday that closed below the 1920 level. Remember, 1920 was the former all-time high going back from 2011. So this was Tuesday, was the first day that we saw the close below 1920. And then it was like, boom, once we see that close, then the follow-through sellers just show up and really took a smacking to the price of gold yesterday before a little bit of a recovery today, right? Okay, so there's a pause. And the question here now is this the end of the selling? Have we seen the bottom to this correction around 1850, or is there one leg lower to come? And let's just think about something. Let's just think about the actual stats here for a moment. I mean, gold peaked, the spot price high from just 4 weeks ago was $2,074 in the spot market. And here we are a little bit more than $200 lower, which is what? 10.9% here, according to my calculation. So that's little bit over a 10% correction. And I'm hearing some sentiment out there, guys, which is basically run for the hills. Basically, forget about this sector. It's all over. It's going straight down. This is the worst correction we can imagine. A little over 10%. Right? So this percentage is really nothing in the grand scheme of things, but it's causing a lot of people a lot of angst right now. And so the point of what we are doing here is to try to keep things in perspective. Let us do that. Let us look at the price of gold in US dollars and take a look here at this 10% or so correction, bringing us right back here into the zone of former all-time high resistance. Now, I want to remind you of something. When we talk about the big picture here, going back from 2000, we're talking about a 10-year bull market followed by almost a 10-year consolidation, okay? And now we're having the attempt to break the all-time high. It made an attempt, and now we're coming back into this resistance zone. Now, go back to 2011 and look how this resistance zone, this is why I call these things a zone, and I have two black lines here, right? Notice the number of times here, 1, 2, 3, that gold saw sellers show up just at this 1800 level, yet the first time gold actually exceeded that 18 and then fell back. So when you have one time up here at 1900 and several times up here at 1800, we have to call this entire region here a resistance zone. This is a zone in which sellers showed up going back 9 and 10 years ago. And now we came back up. You can see that rejection here at the lower end of the zone. We came up, we got back up just above the upper end of the zone, and now we're falling back into that former resistance zone. So the question is this the start of a bull market that is going to take us to multiples of the former all-time high? You know, we'd be talking about 3,000, 5,000. Can we even imagine? The example from the 1970s bull market would be that gold reaches 8,500. That would be the equivalent to what happened in the 1970s in percentage terms? Can we imagine something like that? Or is this going to fail and we're at the start of a new bear market? What I want to show you is where I believe we are given the historical precedent, and what we focus on here is the price action. We look for signatures in the price action with respect to these support and resistance zones. So what I want to do is switch over from gold in US dollars to gold in British pounds and show you the historical precedent for where it appears that we are right now and what we'll be following after this correction runs its course. So you need to look very closely here as we switch this over. Let's switch over to gold in British pounds. We're going to zoom in. We're going to focus on this final several months here. Let's switch over. Boom. There it is. Gold in British pounds from 2000 through the present. Now I've blacked off the part of the chart after March of 2020. The last 6 months have been blacked off here. Other than that, it is the same chart that we were looking at just a moment ago of gold in US dollars, same time scale. Now what I want to draw to your attention is remember what we were talking about here. Remember the 2011 peak. In this case, for gold in British pounds, it was at 1,200, just above 1,200 British pounds per ounce. Notice this 9-year consolidation before what? Gold in British pounds broke the all-time high right here where my mouse is. Notice it broke the 2011 peak. But then what happened? It did not immediately blast off higher to the moon. There was this one correction here from what? Apologies, the one got cut off here in the axis. But from just under 1,300 to just above 1,100. What can we call this? Slightly greater than a 10% correction, huh? Look at this correction. Notice we exceeded the former all-time high and then what? Corrected back to the lower end of the resistance zone, these peaks from 2011, right? What we're going to do is go back and look at the US dollar example. Remember, we're looking for signatures. Markets repeat throughout time. Why? Because human beings repeat throughout time. Our nature repeats throughout time. You don't think it is? Think about what time do you wake up in the morning? What time do you go to work in the morning? What time do you have your first meal? What songs do you listen to? What type of music do you listen to at certain points in the day? Is there a difference between the type of music you listen to in the morning versus at night? Is there a difference between the type of food you eat in the morning versus at night? Does that form repeating patterns? Yes, it does. And in the same way, when we look at a market, the market being the sum of humans coming together regarding an asset class, markets also move in patterns. This is the most important thing about this channel that we're trying to emphasize here. Markets move in repeating patterns, and we can use this information to our knowledge. We won't get every pattern correct, just like I won't know every time exactly when you're going to have your breakfast in the morning, nor do I know exactly when I'm going to have my breakfast in the morning every single time. But the majority of the times, we will be able to make those predictions with accuracy. That is the point. Not all the time, the majority of the times. Let us look. Let's go back. Remember this signature here, the signature of human nature. The peak above the all-time high, gold for British pounds, and then backing off. Let's look at it in US dollars again. Where are we right now? The peak before the all-time high, and then backing off. The peak above the all-time high, I meant to say, and then backing off. Let's go back to British pounds. The peak above the all-time high, and then backing off into the resistance zone. Was this the beginning of the end? Did gold and British pounds then decline for the next several years? Let's get rid of the black box. No. So the peak above the all-time high, coming back into the resistance zone. Notice these subsequent peaks here, the lower band of the resistance zone, and then boom, this dramatic move higher, right? What is this? 1,100 British pounds to 1,600, within the course of 6 months here. Can we imagine that? That is almost a 40% increase in the price of gold. Let's go back to that example in US dollar terms, which is the more important crosspair. Nothing against our friends, our associates, and our colleagues in the British Islands. But you all know that most of the world follows gold in US dollars. And that's what we're focused on here. That's how the mining industry prices its profits. That's how most traders, even most traders in Britain, they trade gold in US dollars, because that's how it's traded on the COMEX. That's how it's traded in most, not all, but most markets around the world. And here we are seeing that same signature again, right? Gold peaking just above the all-time high, and now coming back into the resistance zone. And so if this pattern is going to repeat, and again, there are no guarantees, but patterns of human nature do like to repeat a high amount, a high percentage of the time, and for reasons, because we as humans do not change all that much throughout time. We might wear different clothes, we might have slightly different preferences here or there, but the core aspect of us as human beings does not change that much throughout time. If that is going to hold, then this pattern is going to look something like this for US dollars. And that should be coming up here within the next 1 to 2 months, that we see the final low for this move. And so is this the time to panic and sell everything now, or are we approaching the window here to begin backing up the truck? That is what we have to ask ourselves. Let's take this and zoom it in. A little bit more of the short-term view. Pay attention to the blue. Let's bring up the arrows. Look at the number of times rejected, 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 rejected. And then what? Breakout right there. Red attention. Boom, the surge higher. What is happening right now? We are retesting this line, this upper boundary of resistance that was broken out. We are retesting that right now. Now, I thought the more aggressive trend here shown in turquoise was going to hold. It did not hold. We then have to look for the next logical area of support, which is right now exactly where we are. So, my bias, when I look at the number of times that gold rejected this upper boundary right here, then broke through and is now retesting, my bias is that this is going to hold, and after a bit of backing and filling into the fourth quarter, can we imagine something coincides with, can we say, a little election coming up here in the US, which it appears is going to be contested. We're starting to get hints of that ahead of time from President Trump, that he does not trust the mail-in ballot process, and we're getting a lot of rumbling from the White House that there's going to be they are going to contest the outcome of this election. We're getting that sense of it before it actually happens. So can we imagine if this low, this process here, comes into the November timeframe, and then we get that move higher? Perhaps there's something dramatic that happens at the time of the election. This would be my bias based on the read of the charts. Could the bias be wrong? Could we come, as we looked in the last set of charts, where does that resistance zone really extend to? It extends down to that 1800 level. And notice 1800 is matching with a nice trend here from 2019. And also just below 1800, could we imagine a slight overshoot down to perhaps 1750? Nice area of congestion here. Look, would that be the end of the world? We've already come off $200. Does $100 more mean the world is ending for the precious metals sector? I don't think so. So, our strategy here, we're looking to buy 3 more gold miners, I'll tell you that, over the course of the next 2 to 6 months. We're looking to buy at least 3 more gold and silver miners. And so our strategy to that is going to be to start buying a little bit now in case this ends up being the low. A little bit here within the next couple of weeks. There's a few miners that are on my radar screen. They've had nice corrections. I'm getting ready to make those decisions here. And just to let you know how our last 3 mining selections have come out, here are the gains and losses for the last 3 that we bought. 330%, 103%, and 2.3% for these 3. Those are reserved for our premium subscribers. We are getting ready. And by the way, look at the dates that we bought these. Not even that long ago. If you could talk about a 330 and 100% gain in 2 and 3 months respectively, well, think about what happens here when we exceed this former all-time high. This is my bias. This is what we are looking to do, is to start buying some more of these into this low now that everyone is getting nervous and starting to panic. And then we will save some in case we get the slightly lower scenario envisioned here, where we come down to that 1800, perhaps 1750, $100 more than the ideal scenario. We will be buying our last set of gold miners in here into these lows. And this would round out the sector, just pushing it out greater into time into the first part of next year before we exceed that level. So this is what we're going for here, guys, with the leveraged gold miners that we are looking at. And here is how I believe the gold price action is going to set up. Again, my bias is for this support to hold here. Could my bias be wrong? Absolutely it could. And then we look for even stronger support here just below that 1800 level. Remember the chart of gold in British pounds and how it made that new all-time high, and then it came back and tested the lower boundary of that resistance zone again. That appears to be what gold in US dollars is doing exactly right now. The premium service that we offer, where you will receive the exact research and timing signals of the gold miners that we are buying here over the next few months, that we hope are going to have 100 and 200 and 300% gains again within a few months. That is called Precious Metals Intelligence. You get weekly videos, 50 weeks per year, that cover not only gold, silver, the US dollar, the stock market, and the commodities market. It is like the video you are seeing right now, but it is more in depth. And I cannot possibly imagine investing in this sector without a regular view of what is happening to all these markets from a technical basis, which is what we do. If you would like to work with me one-on-one, please know we are now open again. We're accepting new consultation clients. I put that on pause for a few weeks. I was going away, and we were backed up several weeks ahead of time, and we are now open again to new clients. So if you would like to speak one-on-one on the phone with myself, please reach us on the Consultations tab of the website. And if you would like to continue following these videos, make sure to hit that big red subscribe button, because that is the way to get notified when the free videos come out. Is this the time to panic and sell all your gold and all your silver? Or are we getting closer to the window, even though the short run has given us a few hiccups here? Are we getting closer to the window to make your final purchases before gold exceeds that all-time high for good?